The RSI on the daily and weekly chart is showing a large amount of weakness. Will this weakness result in a downtrend, or is Bitcoin going to be able to break back above that major 28k resistance? Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be doing a momentum analysis on the short-term and high time frame charts, discussing the RSI and many more indicators. The primary objective of today's video is to discuss the looming weakness which is developing on the charts and whether or not Bitcoin is going to be able to break through that weakness, pushing upwards on a high time frame. Before we do get into the video, smash that like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic news. If you are interested in more of that kind of content, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic data. If you're interested in joining our VIP channel, we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. You can see in the last 24 hours, we hit all targets on this trade, absolutely smashing it. Our Bitcoin trade is doing fantastic from our 28k short, and of course our XRP trade, again, fantastic profits on there. We've had 12 trades in VIP this month, and every single trade has smashed their targets. 0 losses, 12 wins. Not only will you get access to the VIP channel, of course with 600 members doing our trading, you'll also get access to the numerous group chats. The general chat, the trading chat, the education chat, the trade setup chat, the news chat, the daily video chat, and of course the help chat. If you're interested in joining all of that, go ahead and contact me in the pinned comment of the free channel to find out more information, guys. Let's go ahead and jump into today's video. Starting on the market data, how are we currently looking? So for the 24-hour period, Bitcoin's overall 24-hour volume, which I say the cryptocurrency overall 24-hour volume, is up 76.98%, sitting at a total of 65 billion. 24-hour liquidations are up a whopping 307%, sitting at a total of 118 million. Massive liquidations there as Bitcoin saw that correction toward the downside. If you watched yesterday's video, guys, you would know we talked about a correction happening in yesterday's video. That was the video yesterday. You can see we expected that move down to around 27,440. We saw that move complete, and again, a lot of people were stacking aggressive longs up in this range here, mistaking this for accumulation when in fact it was weakness. And we saw that correction toward the downside, hitting our targets, actually making some pretty decent profits on Bitcoin there, around 4,000 US dollars. So if you've been following the channel, if you're watching that, congratulations. We'll come back and talk about the short term in just a moment. Moving back to the market data, overall volatility, we can see the 60-day period still moving sideways, and the 30-day period over here, we saw a little bit of a hiccup, but again, slightly downwards. So again, not looking too amazing over on the volatility index. For the liquidations, as you can see, 106 of the 118 came from long positions. So absolute carnage there for those late long entries. Let's go ahead and jump into DXY. The DXY is actually currently retesting / breaking down from this rising channel formation. And of course, as you know, we have been expecting a breakdown at some point. We did say a breakdown from this structure is inevitable. The next question is, how deep can the DXY actually move? If we take a measured move analysis from the width of the channel applied to the breakdown, we can see we are expecting a retest of that 50 EMA, potentially dipping into the 104.4 support range. From there, we'll either create a new market structure, find support and continue upwards, or reject much lower. Overall, if the DXY does move down, this could provide some well-needed relief for the broader markets and potentially for Bitcoin as well. So we do have to apply this now to our contextual analysis, when we look at the charts, we do have a potential for weakness to dissipate based on the fact the US dollar is going to be dropping in value. And of course, if we look at the upcoming economic news, we do have, of course, on the 11th, which is tomorrow, PPI, and of course on the 12th, which is the day after, our FOMC meeting and our core inflation data. So these news events can massively shift the direction of the DXY. It can massively pump it, or it could massively correct it based on what data does come out, and we're discussing that in the video after tomorrow. So take it with a grain of salt what the DXY is doing for now. Wait until after CPI to kind of see how the markets reacted and how that data reflects in the markets. Moving over to the S&P 500, we have seen that weekly candle actually close above that high time frame diagonal trend line. So looking pretty decent on the weekly. On the daily, we have reclaimed that trend line. For now, again, for strength to really come back in, we need to clear this low point. We can see this low point at around about 4,400, we'll say 4,400, maybe 4,385. If we are able to clear this low point, we will see a push back up into this range of resistance. Until then, resistance is resistance until it is not. We could see a correction. The DXY continues downward, we are more likely to see that upward move. The same goes to the Dow Jones, guys. We reached our bearish target, we found support, and we have bounced. For strength to come back into the DXY, we do need to clear out this low level at 34,135. Again, if we break above this level, we will see a move back up to our level of resistance. And again, if the DXY moves downwards, this is more likely. So watch over the next couple days what the data is and how the markets react. Let's go ahead and jump into Bitcoin. So I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. At the start of the video, we said on the daily and on the weekly chart, we are seeing some weakness here based on the momentum, based on the RSI, based on the market cipher B. We'll be discussing that in today's video, what it means and what the bulls need to do to regain that strength to actually push the prices higher, and what this weakness is currently suggesting. So first and foremost, let's discuss this range. Bitcoin is in a high time frame range between two major points. The main low support range is 25.2 to 24.4. We've defined that, we know that already. The main level of midline resistance is going to be 28 to 28.4, and the upper level of resistance is going to be 31.3 to 32,000. Those are our key ranges. If we zoom out and take a look at the price structure, we can see Bitcoin has been consolidating sideways between this range for quite some time. Again, this mid level is going to be a trigger point for a continuation upward, meaning if we are able to break above 28.4k, we are very likely to see a continuation to 31.3. Again, based on historical data, what have we seen in the past? We've seen this 28 to 28.4k level act as a resistance. When we finally broke above it in late June, we saw an explosion in volatility pushing the price upwards to an upper range of resistance. We came back down, we retested and broke through it. When we broke through it, we saw an explosion in bearish volatility pushing the price down to our lower support. Now we're coming back up to retest this level. However, we are retesting it from a position of weakness, not a position of strength. When we saw the last retest, we retested the level of resistance from a position of strength. If we take a look at that respective RSI trend line and we drag it across, we can see when we actually broke through this level before, we had bullish momentum. We had a positive RSI shift. However, in this instance, we have this overall exhaustion structure building on the RSI, which is reflecting this level is quite a challenging point for Bitcoin to push through. If we break down on the RSI over here, the RSI breaks this trend line, we're actually very likely to invalidate a possible breakthrough and push lower. So as we stand right now, there is pretty much a decent chance we see a breakup or a breakdown. We are slightly more in favor of a breakdown as right now, but it's very slight. It's only a couple percent. If we see that RSI shift, however, the probabilities of a continuation lower absolutely explode in comparison to a continuation upwards. So first and foremost, for the bears to push the price aggressively lower, and by aggressive lower we mean back to its high time frame support level, we need to see the momentum flip negative on that daily chart. While the momentum remains positive, and remember it is positive, but it is weakening, we have weakening positive momentum, we have a possibility to push through, but we need a push. We need a surge in volatility. We need a surge in strength to really push that price up. We'll discuss that in just one moment. So overall, we have exhaustion happening into resistance. When that happens, we expect rejections, and that is what we did see in the last 24 hours. Again, that exhaustion has not developed into a downtrend yet. We are still in an overall uptrend. However, it does have the possibility to do so. So let's go ahead and talk about what is happening in this range, and then we'll go back to the weekly chart and discuss the technicals and momentum on the weekly chart. So if we take a look at the current range we're discussing, and this is of course that daily RSI range over here, I'll circle it one more time, this range of price action. If we zoom out on the 4-hourly chart, we can see that range now has actually developed into a rising channel formation. That range is a rising channel formation. Why do we have weakness on the daily chart? Why do we have exhaustion on RSI? Well, because that's what a rising channel is. It is a visual representation of an uptrend that is exhausting. When we have that, we have a rising channel formation. If we validate our rising channel, we have 5 points. 1, 2, 3, 4, and we're looking for 5. We're looking for our 5th point down the bottom. So we do expect a retest of this level. If we do retest this level, we're very likely to see that RSI break through. And if the RSI breaks through, we're very likely to see a continuation lower. If we take a measured move of this structure, apply it to a perceived breakdown point, you can see that target takes us back to 25.2. Hence why I said, if we lose this RSI trend line, we're likely to see a correction back to 25.2. So now you know the justification behind that statement. However, just as we mentioned on the daily chart, while we are in an uptrend, the uptrend could definitely continue. This is an overall uptrend. It is exhausting, but it is an uptrend. For the price to continue aggressively, we need to break above that 28K trigger. So while we remain under here, we expect a move towards the uptrend. While we remain above here, we then expect a move up into this level of liquidity. And if we break a daily and close a daily candle above 28.64, we expect that breakout to be validated, and then we expect a move upwards. As you can see, this 28.6 to 28.4 level is a possible area of liquidity where you could look for new shorts if the price pushes to. So that is what is happening on the small time frame, guys. We are not looking very good. We are developing some bearish structures. Negative momentum is building up. The bulls do have a chance to push the price upwards still. They do have overall trend control, but they are at risk of losing that trend control if Bitcoin pushes any lower. Again, if the RSI on the daily level is lost and this trend line on the 4 hours lost, that is when we enter an official downtrend. If we enter a downtrend, we expect that downtrend to continue until we reach major areas of support. Until then, guys, we do have that potential for the bulls to push it up. And if they do push it up, we do expect a breakout of 28K and we expect a move to 28.6. So on the weekly charts, what are we really looking for? First and foremost, let's talk about our standard indicators and then we'll come down and talk about the RSI specifically. So for the bulls to reclaim control on the weekly chart, we obviously need to break through that high band of the Gaussian channel, the upper band of the Gaussian channel, this upper green line. That is going to be sitting at around 28.4K. Again, 28.4K, the number that just keeps coming up, is of course the upper level of resistance of this range, and of course is represented by the upper level of liquidity in this range over here. Until Bitcoin is able to break above that level, as I have been saying for weeks, we do not have the strength required to push the price higher. If you are overly bullish here, you are overly bullish at resistance. So there's so many people tell me, Whale, why are you expecting rejections at 28K, blah, blah, blah. Look at what has happened. We've seen these pullbacks, we've profited from these pullbacks, we've got our stop losses entries, we've taken profits. It doesn't matter what happens to the price. Now, I don't care about being right, I care about making money. And that is exactly what we have done. We have made tens of thousands of dollars trading in the last few days just from this little resistance, this little range of rejection, following the core principle. The core principle is trade based on probabilities. Resistance is resistance until it is not. And when you see exhaustion moving into resistance, the probabilities of rejection are greater than the probabilities of breakthrough. Apply that to 100 trades, apply it to 7 years of trading, you come out with a net profit. And that is exactly what we focus on when it does come to trading. Not being right every time, but over a large scheme of trades, we are always coming out on top. Moving from there, guys, let's take a look. So 28.4K, really important level. Bull market support band, we are pushing above that level. Good to see. We have actually broken back below it on a small time frame. We are sitting at around 27.5 right now. 27.5 is actually, if I zoom in a little bit, 27.5 is kind of in the middle of this bull market support band. We're sitting kind of in that middle of the bull market support band. Again, technically that would be considered a level of resistance for now that we're retesting. Moving downwards, if we do lose that uptrend, right? If we do lose this RSI trend line, if we do lose this uptrend on this level, that would take us to around 27.1, okay? Assuming we go to 27.1, a loss of 27.1 will actually take us underneath the bull market support band on the weekly chart, and that will push the prices lower, guys. It will indicate a nice strong rejection from that bull market support band, possibly pushing the prices lower. So we do have a degree of weakness over there. Furthermore, if we go over to our RSI chart over here and we draw in a major trigger point, the major trigger point is 62.19, and you're probably wondering, what the hell has 62.19 got to do with anything? Well, if we look at the historical price action, I'll show you. Every single time we see a breakdown from 62.19 on RSI, we see a downtrend begin, right? I'll go ahead and draw them out. Every single time we see a breakdown from 26.19, we see a downtrend begin. We've seen it pretty much every time. I'll be quite honest with you guys. On the weekly chart, pretty much every single time we've seen it, we've seen at least a 10% minimum pullback for Bitcoin. We'll go ahead and draw the last couple years in, and then we'll show you. So let's go over here. We saw the breakdown of 62.19. We saw a strong pullback for Bitcoin, okay? We saw a strong pullback for Bitcoin. We saw a breakdown 21.91. We saw a strong pullback for Bitcoin. We saw a breakdown of 62.19, strong pullback for Bitcoin. That's like 20-30%. Over here, 62.91, broken down, strong pullback. Once again, over here, we saw a 15% pullback. And over here, so far, we've seen about a 15, even 20% pullback to the lows. Now, when does the price generally reverse? The same thing happens when we break above it. If we break above that respective point on the RSI, we'll go ahead and draw in a different color. Let's go ahead and do, what should we do? Yellow. Okay, we'll go yellow. When we break above the 62.19, we see a small uptrend begin, right? Sometimes it's big, sometimes it's small, but generally Bitcoin all goes up. That's 10%. Okay, nice strong 10%. We saw a breakout over here. Okay, on that candle, Bitcoin saw a nice 20% rise. Moving back, we saw a breakout over here on the RSI. Bitcoin saw, you know, a pretty decent 20% rise once more. And again, we can go back in time many times. We saw a breakout over here. Huge uptrend for Bitcoin, 300%. We saw a breakout back over here in April 2019. Again, huge move for Bitcoin, 100%. So you can see how momentum dictates direction, as momentum is a combination of volatility and volume and volatility. It is strength, velocity. It is showing us the power behind the buyers and sellers, where that is going, how the shifts in momentum occur. Is there changes between the habits of buyers and sellers, and can that push the price upwards? And we see these high time frame shifts in momentum. They are not something to fade. They are definitely something you should be paying absolute attention to. So when are we really expecting the bulls to regain control again? If we see that RSI trendline break, that will be a fantastic indication that the bulls are really regaining control on the weekly chart and momentum is back in favor of the bulls. Again, guys, I'm not overly bearish. I'm realistic. I follow the charts and I trade. If you've been following the channel for however long we've been here now, you would know I was bearish up over here. I expected a full pullback to $18,000. I was saying that months in advance. At $18,000, we were buying Bitcoin. We bought Bitcoin over here. We finally bought Bitcoin again at 16.5K for our major purchase. We have been bullish ever since. We were bullish. We sold at 31.4K, literally on this top. We rebought and entered longs at 25.2K, and we shorted aggressively at 31.4K. Again, expecting a bounce from this level. If you have been following the channel, you would have called and predicted, not even predicted, you would have traded every move absolutely perfectly. So again, remain objective, remain logical, listen to yourself. If you have the data like I've got 7 years of data, Excel sheets on top of Excel sheets on top of Excel sheets of thousands of trades, traded, backtested, forward tested, calculated, percentages, everything. If you've got the data and you know what you're doing, focus on listening to yourself. Don't listen to the people on Twitter trying to play on your emotions. Oh, Bitcoin's in a bull run when it's not even close to a bull run. Bitcoin's in a bear market, we'll go down 10%. They are not there to help you. They're there to get your money, or they're there to scam you, or they're there to influence your decisions to buy some shitcoin they're going to post in 2 weeks' time on Twitter to pump it up, okay? Focus on the facts and the charts and the data. The charts are the only thing you need to trade effectively if you understand efficiently how to actually use it. Again, the RSI is a phenomenal tool, but it is massively underused. It is used incorrectly, and most people use it incorrectly, and they think, oh, the RSI doesn't work, momentum's a scam, but it's not because it's a scam, it's because you don't understand how to use it. If you try hammer a nail into a wall with a fork, it's not going to work very well. That doesn't mean hammering a nail into a wall can't happen. You have to use the right tool for the job, right? So same with technical analysis, same with trading. You have to use the right tool for the job, and you have to know why you're doing things and what you're doing things for. If you're just drawing shapes on a chart and you're just drawing lines, you may as well become an artist, mate. You're not trading, okay? The lines and shapes on the chart tell a story. They are not here to draw a line. We break over a line, we enter along. We're not trading based on the shapes, okay? The structures on what you draw on a chart tell you a story about what buyers and sellers are doing over a specific period of time. It can tell you about exhaustion, accumulation, distribution. It can tell you about a whole range of things, compression. And if you understand what the charts are telling you from a contextual position, and you understand the drivers on which you can move the price action in the future, you can apply your strategies and make your decisions to make sure you are more likely in the favor of the market and you can profit, okay? Remember guys, trading is not always about being right. You're gonna make mistakes trading. The real important thing is, as you get better, mistakes don't go away, but they get further and further apart. So maybe you might make a mistake every day, then after a few months you make a mistake every week, then after 10 years you make a mistake every 2 years. The mistakes will never go away. They are programmed into our human psychology and emotion, okay? It's about distancing those mistakes and applying correct risk management, so when you do make those mistakes, it doesn't wipe out your entire portfolio. Thank you for listening, guys. Thanks for tuning in. I'll catch you guys in the next one on Thursday. We'll be talking about the economy. We're discussing the upcoming interest rates, potential upcoming inflation data, and of course, Bitcoin's price action. See you guys then. Cheers.